Hey everybody, this is Prince and it's 18th of October 2020. So this video is all about just assessing the historical events of the drops that happened in the US Tech 100. I've been chased a lot to discuss and to make a video on doing some basic analysis on the crashes that happened. Now, of course, I'm a very technical trader. I do not really care about the fundamentals. I'm just a double moving average cross trading guy. And of course, I don't claim anything. I'm not a licensed trader or a certified financial advisor. And this video is strictly my personal opinion. And any information that's shared here, okay, you're responsible and liable by yourself on how you use it. So let's get started. We have approximately 4 to 5 historical crashes. Let's begin from the beginning. Now, the trading platform that I'm using is MetaTrader 4, a PC version on a weekly chart. And keep in mind, it is a NASDAQ December 2020 contract. So let's get started. So here is the biggest crash. In 2007, from 2006 onwards, the markets were pushing strongly towards the upside. It's almost an 8,000 point move, 800 point move. And then you can see the markets, they failed to continue to trend towards the upside and they took a strong nosedive. Alright, so this is the first crash of 2008. An interesting fact, during this time, there were no circuit breakers policy and there was no freezing policy. Now there's a policy, as per my information, if the market drops or shoots towards the highs and the percentage movement is more than 6% or approximately 6%, the market freezes, and this helps in people in, or let's say the market makers or institution traders, in managing risks. I don't know what are the technical details behind it, but like I said, the purpose of the video is only to assess the crashes. I've made an Excel sheet, so we're going to go through it. So this is the first crash that happened started after October 2007 and it ended approximately during 15th March 2009. Wow, that's a pretty big crash, yeah? But the lowest drop it made, the low was in 2008. After that, you can see the market had recovered and started trend towards the upside, and we can see a consistent movement, US economy boosting, technological advancements, the rest is the history. So the second crash, it started in 2015. This is the high, approximately around 4,719. That was approximately the highest price, and it dropped almost 930 points. Is it 930 or 9? Let's calculate. It's 3827. The 47. Yeah, almost 940 points, which is really not so big, huh? 940 points. Then again, technological advancements, 2016, technology boosting, and then it leads to 2018. Again, we make a high and it's a strong correction of 2,000 points, approximately 1,900 points. We make a high here of almost 7,745 until 5,853. The third, or let's say it's the fourth biggest crash that happened, is during the KUWAIT crisis. And you can see this is a huge drop, 3,100 points, from 9,744 approximately to 6,609. So we have seen the crashes visually. How can we benefit from this information? For that, I have worked out an Excel sheet. So let's go to the Excel sheet I have here. So these are the historical crashes. Let me fix the spelling for you. Historical crashes. In 2020, we had a high on the December contract of 9,762.5. and the lowest was 6,627.25, and this drop is approximately 47.31%. That's really huge, huh? Especially for those people who are trading with leverage, be careful. So that's why you can see leverage can be quite a pain in the neck, especially when the market goes against you. Then 2018, we had the high at 7,728. The market crashed at 5,867.75 level. This drop is approximately equal to 31.7%. 2015 to 2016, we had a movement from 4,739 until 3,862. This is 22.68%. The most dangerous drop that happened was from 2000 to 2008. The highest price we had on the NASDAQ was 2,255.75, and the lowest price was 1,017.75. This is a 121% drop. You can even say, if you want to really round up the numbers, it's 122%. Now on the right hand side, I've calculated the average drop in the last two crashes. If we take these last two crashes, and the average drop had been 39.51%, and the average drop of the last three crashes is almost 33.9%. And this is the worst one, which is 121%. And of course, it's not decent at all. It's a bloodbath, and I believe it's the time when I started to begin trading. I believe I was only trading on demo. That time I was just a teenager, and when there was a bloodbath, I probably was out of it because maybe I didn't have funds that time during trade, but it's been a very long time. So in summary, this Excel sheet is just the data presented in this Excel sheet is just giving us a heads up that the average worst case drop that has happened is 55.83%, or in the last 2 years, last two crashes, it's between 33 to 39.51%. So let us say if it's 39.51%, we can use the information in such a way, like we have the current market price is at 11,790. So let's take out our calculator. $11,790 minus 39%. This calculation is of considering severe or worst case scenarios, extreme worst case scenarios. So yeah, that's the number 4,598. So we are going south as per this calculation. So 11,790 minus 39%, which is showing not a decent figure. Am I calculating right? I'm not sure. 11,790. Let us assume it's 40%, not 39%. So I'll try to deduct 1,790 4 times. Yep, we've got 4,630%. Sorry, $4,630, which is really big. Now, is this gonna happen? I don't know. I don't have a magic ball or a crystal ball, but I could use this information for myself and see if I can benefit from it. At the moment, if we see the current scenario, the biggest crash that happened during this year, it was around 6,619. I could use this level here as a major support. Also, I can use these levels here around 10,290 and 10,645 as major support areas. And in trading, usually what's resistance becomes support. So 9,744, this area, this zone here, could also be used as a major support zone. So a word of caution. If you're familiar with price structures, we may have a double top forming, and usually when we have a double top forming, it is really not good. We might see this crash. We might see a market on the weekly time frame forming a crash here. You can see this area. This is the area that I'm concerned about. And you can see the market went towards the upside. We had rejection, and the market gives it a second push. The buyers failed, but the good thing was that previous week's low, the buyers defended the previous week's low. So looking forward to the market open. I hope this video was helpful. If you like it, please give it a thumbs up and share it with your friends, fellow traders on your social media. If you don't like it, give it a thumbs down, and also feel free to share your comments. I don't mind any kind of comments, and I do handle criticism very well. Thank you so much for watching. Have a great trading week ahead, and bye bye for now.